Hello traders, how are you? I just wanted to go over a quick concept with you. Um, had a lot of questions about this lately, and specifically how it could relate to prop firm assessments, and not just the assessments, but then when you're funded and staying funded, because that's really the name of the game, right? Um, 95% on average don't even make it past the assessment. And that's unfortunate. We're trying everything we can do to change that. But um, the real goal is to get funded, stay funded, and be taking regular payouts, right? If we're not doing that, then what are we doing? We need to get there. So, sorry, I'm just getting it so we can read this thing. So, the question that on the table is, should we, pay for those add-ons that let us hold over the weekend? And lately, I've been coaching a lot of traders that trade metals. Trust me, I understand why metals are attractive to trade, uh, particularly because they they move, right? You can make a lot of money really fast. And obviously, we all know that comes with the other side of that coin. You can lose a lot of money really fast. But if you read the chart well, you can you can pass an assessment in one day. With Paragon Funded Trader, there are no consistency rules. So in forex and CFD trading, you can literally pass your assessment one day and start taking payouts. Um, there is an add-on for bi-weekly payouts. Uh, and something I want to talk about just briefly, this is not why I started this recording, but Paragon's drawdown, maximum drawdown limits. So, and what you'll find with us is that our rules during the assessment are the same rules that apply to the funded traders. Okay, so let's say you have a $100,000 account. Okay, 5% daily drawdown limit and a 6% maximum drawdown limit. Okay, let's say you pass the assessment. There's a 10% profit target, so you make $10,000 and you are funded actual live capital, okay, not simulation accounts. That's not how we do our funded traders. When you're funded with real money. So when you're making gains as a funded trader, that's why we have a 100% payout track record. It's easy to pay payouts when you're just paying 85-90% of a gain that's already been realized, right? We don't depend on assessment fees and reset fees and add-on fees and anything like that to be able to pay out to our traders. If you become a funded trader and you have a $100,000 account, you'll start over 100,000. Your max drawdown will be 94,000, right? Because that's 6% from the 100. And day one, your daily drawdown will be 5,000, so 95,000. So day one, $100,000 is your balance. Your daily drawdown can go down to 95,000, and then your max drawdown can go down to 94,000. Okay. Let's say you make another 10 grand really quickly. Now your balance is at 110,000. Your daily drawdown is 105,000, right? Or no, I'm sorry, it's 5% of 110,000, so 5,500. So it's 104,500. That's what your daily drawdown can go down to. But here's the great thing. Your max drawdown limit will never go above the original account balance. So you can make $10,000, and technically now you have $110,000, so 6% of that is $6,600, right? Technically, with other firms, your max drawdown would be 103,400. But with Paragon Funded Trader, you will never have a max drawdown limit that goes above the account balance, the original account balance. So you can make $10,000, $20,000, $30,000, and the max drawdown limit will stay at $100,000. So as long as you're not messing up the daily drawdown, the more gains you make, it just takes you further and further takes you farther away from the max drawdown limit. You can make 70 grand, and if you haven't, I don't assume you'll make 70 grand and not take payouts. Please take payouts. I mean, do it. But if you haven't, then you're 70,000 away from your max drawdown limit. You still have your 5% daily drawdown, right? But as far as your max drawdown limit, it stays at the original account balance. I love that part. All right, so, but we've been talking about holding over the weekend. My quick question is, why do we want to do that? And I always compare holding over the weekends in both forex and CFDs to holding a stock option headed into an earnings announcement, a quarterly earnings announcement, right? And considering how volatile these have been in the silver dollar asset, I'm going to compare them to, say an options, buying a call or buying a put. So you're taking a directional binary event right before an earnings announcement. And I'm going to say we're doing it on a retailer, because retailers either get crushed on their earnings announcements or they just soar. Wall Street, for some reason, is very, very hard on retailers. Everything's got to be perfect. Their same-store sales growth, their overall growth, their gross profit growth, their net profit or operating margin growth. Are they cannibalizing themselves? If so, was that expected? I mean, there are so many factors. When I used to run a mutual fund and I used to analyze public companies and value stocks, and I'd have 30 to 40 companies that I followed in my fund. The retailers, we just had to know those inside and out and have a good idea of what they were going to do. Now that's trading the actual stock. Trading stock options, there are things you can do to minimize your risk, and actually, depending on when you set up the trade and how far out expiry is, you can do what's called a ratio backspread. Anyway, you can't do that in CFDs or forex trading. Okay, so my question is, why do you want to hold over the weekend? And I just as an example took the XAG USD just for an example. Over the last 1, 2, 3, 4, 5, 6, 7, I left that one alone. So 8 out of the last 9 weekend holding periods. So from Friday to Sunday night, this is what has happened from Friday's close to Sunday's open. Okay? So I don't know why some of these have why do some of these have the, all right, I wanted them to just have the pips, and oh, that one still does. Sorry about that. I'm just trying to see the pips and how much the loss or how much the change would be with a full lot. Okay, so as we know, with the USD as the base currency here, or the quoted currency, 1 pip is worth $1,000. Okay, and XAG USD and XAU gold dollar, the pips are just like the cents in dollars. So just like the yen, 1 pip is the second decimal place. Okay, so right here, how many pips did that change over the weekend from Friday's close to Sunday's open? Well, it changed 185 pips. What if you'd had a standard lot? Well, the change in this price, let's go in and examine this. So this is where it closed on Friday, okay? And this is where it opened on Sunday night. So just assume you're banking pretty heavily on an event that 8 out of the last 9 times probably would have burned your account. I mean, $23,000 loss, $14,000 loss. And this is assuming you have a one standard lot, so $100,000. But let's assume a mini lot. So that is now $2,400. $910, $300. My question is, why risk it? $1,400 on a mini lot. But a mini lot, again, is $10,000. If your account is $100,000, a mini lot, so 1/10 of your account balance, is that a position size you're going to be happy with? Even if it works out in your favor, I would assume you're not trading a bunch of different things at the same time. You're kind of focusing on one chart, one asset. Maybe you're trading both the precious metals, so silver and gold, but you kind of want to be weighted, right? So let's assume you have maybe 5 mini lots. So your gain or loss is going to be half of these. Well, like I said, daily drawdown is 5%. So that did it. Just by opening, that almost did it. Just by opening up on Sunday night, that definitely blew your account. So blown, almost blown, definitely blown, halfway there, daily. Plus, where did we start with regards to the max drawdown? So why risk it? And then the question I got was, well, can we go in and can we see if there were any indications that which direction it was going to gap, which is again, this is assuming anyway, so why do we want to take the risk? But okay, let's say that we want to play that gap risk because we think we can decide which way the gap is going to be. Well, right here, and I don't know why I can't, there we go. Right here we have a high basing pattern going into the weekend, right? It's a pretty tight high base, but there's almost no volume. I've got my double RSI screaming that we should be going down because the price action is staying, let's see, from here the RSI goes up and the price action stays relatively same. But then we have this bar here telling us that the relative strength is not moving the same as the price. So, but anyway, I'm not seeing anything here headed into the weekend. You know, take from here forward, and let's say I can't see it. This candle right here is completely, there is no conviction either way. I mean, look at the wicks. There's barely any wick. And the doji, so it opened and closed almost the same price. And the the range for that 1 hour period is almost, I mean, non-existent. So there's nothing there that would have told me, oh, if I had to bet which way this thing's gapping on Sunday night, it's going to be up or down. I mean, there's nothing that would have told me either way. So again, you're rolling the dice. Let's go to the next one. All right, so let's see where we are. Sunday, Friday, Sunday, okay. So this one wasn't Friday. Let's go 15-minute auto. All right, let's just look at this one because it's right here. All right, so we got a 15-minute chart, and I'm looking at right here. I'm looking at Bollinger Band width. I'm going to look at ADX a little bit here. So right here, everything forward we can't see. So right here, I'm looking at ADX right here, and there's nothing attractive about this. Nothing telling me which way this could be gapping when, you know, in 2 days when the Sunday market opens. What it actually is telling me is I have my RSI set at 90 and 10, okay? Because I want to know when it's at the extremes. Now, if I roll back, how often does it hit this 10 and stay there very long? That's why I don't have it at the 30 or 70 or the 20 or the 80. I want to know extremes. Because, and it's the same reason I have my Bollinger Bands at 3 times standard deviation rather than 2. Because I want to know if I see a price coming out of the bands, that is an extreme value, okay? Same thing down here. So if anything, I would have thought at this candle, we're below the 10 value on RSI on that candle. How often does it get there and go much further below and hang out there for a long time? It doesn't. It usually bounces right back up. Same thing when it gets up to 90. It usually bounces down. Those are extreme values. So if anything, I would have bet that this thing was going to bounce up, was going to gap up. ADX does nothing for us to tell us which direction it's going to go. The Bollinger Band width at that candle, you know, isn't really a peak, so my assumption is it you know, the Bollinger Band width isn't a concern for me at this point. But like I said, if I had to be if you know, gun to my head and I had to flip a coin, I would have said it would have gapped up if there was a gap at all. It did not gap up. I'm just trying to answer the question, you know, are there things we can see to let us know which way it's going to gap? Okay. For example, at this candle, last Friday, same thing. It's hitting the 10 down here in the RSI. Now look at the ADX, how unattractive that is. It's not showing any trend at all. And just like I said on the last one, if I had to bet, I would bet that it's going to gap up, if anything. But I don't like I mean, look, this is the trend line, the white. We only like that if it's above 25. Well, it's half that. My point is, why risk it? If we are holding over the weekend, we are simply gambling. I'm just going to say it. I'm going to be bold and say it. People that want to hold over the weekend want to get lucky. It's like playing roulette. Black or red. Let's assume there's no green. And they're putting it on one or the other, and they're either going to pass or they're going to blow their account over the weekend. If you're doing that, you're not trading. You're gambling. We don't gamble here at Paragon Elite Trading or Paragon Funded Trader. We don't want our traders gambling. So, even though some of these gaps are a lot smaller than the others, my question remains: why risk it? I mean, let's assume you have a great thing going, you're trading well, and something like this happens. Let's look at this going into the weekend. So we're on the 15-minute candle, and we've got that candle. So again, ADX isn't telling us anything. The RSI is now at 18. Which way, if it has to gap, again, we're only 8 digits away from hitting that extreme value of 10, and now we're in an oversold area. So if I have to gamble, I'm going to say it's going to pop up, because there's nothing here telling me. Look at these candles going into the close. There is no price action, and there's no real volume. And even when there is, a spike in volume, look at the candle it represents. There's no conviction either way, right? Going into the close of a Friday. All I know is RSI is getting really low at that point. That point, RSI is at 15, 16. Normal oversold RSI is at 30, right? So we'd say for sure it's oversold. Who would have guessed this? This massive 234 pip decline at the open. That's at the open, guys. People think, well, I'll just have my stop loss on down here. I'll set my stop loss for like 20 pips. Worst thing, I'll lose $2,000. No. If there's no one to buy until here, your stop loss is not going to be executed. That's what gapping means. It'll gap right through any stop loss you may have put on. Say I put my stop loss there to get me out. But the price opens here. That means, if you look at a second tier orders book, you're going to see that all of a sudden, heading into Sunday's open, nobody's buying up here. They're buying down here. That's a long ways. And your account is for sure blown. Absolutely blown. In any prop firm, that will blow your account. I don't know any prop firm that'll let you have a daily drawdown. Let's assume you have a $100,000 account. I don't know any firm that has a 24% daily drawdown limit. Neither are there any firms that will let you purchase up to a 24% daily drawdown limit. So again, my question is why? If you're a trader, why do you want to hold over the weekend? It's just especially for asset classes like precious metals, it just doesn't make sense. It doesn't make any sense. If you're a trader, be a trader. Don't let, you know, a roll of the dice determine where you're going to be come Sunday when we open. All right. Um, it's not worth it. It's definitely not worth it. And we can teach you how to trade. You don't need to do this. You don't need to roll the dice and hope for the best. Don't do that. And if you're an stock options trader, don't buy a call and don't buy a put heading into an earnings announcement. Don't do that either. We can teach you how to do it much better than that. But all right, I just wanted to look at those and in some detail, just to show you, 8 out of the last 9 weekends, the consequences would have been material to your accounts, and most of the time it would have blown your account, if not gotten you, dangerously close to your max drawdown or daily drawdown. Okay, so if you know how to trade, technical analysis, charts, you have your trading plan and your process that through practice and journaling, you've proven that works. Why risk it? Why roll the dice and risk it all and have to start over? Why? If you have a system that works, don't bet it all on maybe it'll gap your way. No, let's not do that. All right. Okay, guys, I'll quit harping on this, but I'll talk to you soon about another trading concept. Trade well, my friends.